ESG Analytics MD Sifiso Skenjana joins us now for more reaction. Good afternoon to you, Sifiso. A marginal adjustment this time around, much like what the market had expected. Talk to us about the momentum that we may start to see, even though that pace at this stage remains quite small and steady, one would say.
Good afternoon, and of course, good afternoon to the viewers at home, to Misang. I think, yeah, there are probably two tales to the story in terms of this unemployment read. When we look at, and I'll quickly take a sectoral view before I take a bigger macro view. Agriculture grew 3% year on year, 3% quarter on quarter, and they're back, in essence, closer enough to that 960 million. So I think it's about 950 million people employed in agriculture now. And I think in terms of peak employment in agriculture is close to about 1.1 million. So I think there's definitely, an improvement that's come there. Also, notwithstanding, of course, the pressures around AGOA, as well as the pressure around Liberation Day and that 30% tariff. And so seeing resilience in that sector, and of course, there were good rains, and so good for the grain sector. I think probably the one sector for me that is really, upbeat insofar as this employment print. Outside of that, you start to look at other sectors and say, is there really a bee underneath my bonnet? And I think there is. We saw that a lot of the informal trading cleanup ahead of G20 has translated into these numbers as well, right? And so there were a lot of people, in essence, where we started to make our country look cleaner than what it was, because apparently informal traders make our country a little bit dirty. And so there's been a massive drop in informal trading employment numbers in this particular context. And I think that's really something that we must double click on, because it's really, telling you also some of the other kind of indicators in terms of household health. We've seen weakening poverty numbers. We've got about 70% of people in South Africa exposed to at least one dimension of poverty as it stands, and so which means weaker household spending. And so all these things, for me, despite improved, for example, PMI numbers from business activity, that still, those numbers are still in a contractory space. And so I think we must look at this print with at least two pair of spectacles.
I agree with you on the latter, and looking to find out the near-term outlook then, given that the momentum as well as sentiment for 2026 is slightly optimistic, but with the needle moving as slow as it has in South Africa, how really should the expectation be practical?
Yeah, I think it's going to be quite tricky to Misang in an election year, because there's often a bit of an investor standoff, or at least wait and see type of approach. And so firms tend to be a little bit more trepidatious in the way in which they approach labor choices. What we're also going to see is, of course, all the things that are happening around the just energy transition. That's got upside risks from an employment outcomes point of view. And so there's some displacement pressures that are going to come there. There are technology-related potential displacement pressures that are also looming in the context of our economy. And of course, we're hearing investment in data centers, etc. But there is a displacement effect. So there's an upside risk, I think, in terms of displacement effect from a labor outcomes point of view. We've seen now also British American Tobacco leaving Lesedi municipality. We've seen what's happened with Clover in Lichtenburg. We're seeing with AMSA in Newcastle. These are all risks to labor displacement in vulnerable sectors, especially also in these small towns. And so I think from an outlook point of view, my sense is that there's definitely, quite a bit of risk that is going to breed while corporates are doing a bit of an investment standoff from a labor point of view. When you look at the QES, which is the quarterly employment survey, you're starting to see a bigger shift from full-time employment to part-time employment. And again, that's giving you a signal around investment choices from a firm's point of view. And so firms are moving towards pushing people into more temporary work. And so also then now, I think what will be quite interesting coming out of this particular type of print is the quality of work, and say, are we able to then, cut through or have a cross-sectional view around, okay, we've got a labor force of this size, this many people employed, but what's the quality of work of the people employed? And I think that really will give us a good texture around the real state of the economy or the real feel effect from an employment outcomes point of view.
Speaking of the quality of work in the country, the QLFS for the fourth quarter is, of course, focusing on the last 3 months of 2025. And that's where we see a lot of seasonal opportunities in the likes of retail, given the festive season. How then do we look at this particular print in the context of course, it is a season that is likely to create more jobs than any other quarter?
Yeah, but I mean, we still look at both a quarter-on-quarter kind of analysis as well as a year-on-year. And so, on paper, I think that does look like there is a marginal improvement. And so I think we must respect the statistics for what they say, in the sense that there is a marginal improvement. All I'm advocating for in the context of how we read this, even then when looking at how kind of Q4 tends to move, we saw some of the guys, for example, pick and pick, not getting the numbers that they wanted from the Black Friday effects. Even, from a travel point of view, there was some of the kind of muted numbers coming through there. And so there wasn't this big festive season flurry that I think could have really, energized the quarter in the way in which it could have. And I think that really speaks to, again, as I said, the kind of declining sentiment at the household expenditure perspective. But it's also, I think, speaking particularly to where enterprises are. And this is exactly, I think, the point that I was making is that, I mean, just looking at an issue of minimum wage. We saw an improvement or an increase in what is the minimum wage, yet you've got 90.1% of companies in South Africa are not compliant in minimum wage requirements in one way or another. And as a result, you've got 70% of people in South Africa who are what we call working poor. And that means that they are earning, but they're still living beneath the living wage, which is about 7,840 odd. And so you've got an issue here where even employment outcomes don't actually change, in essence, the poverty incidence in the context of the country, also because of corporate misbehaving in the context of our economy. And so when we are hearing issues around labor inspectors and the growth and an investment towards that, it's actually quite a positive thing coming out of the state of the nation, because of the lack of compliance that is coming from corporate as well. And so you've got issues of a constrained economy, then you've got issues of lack of investment in some of the dying small towns, and then you've got issues of corporate itself misbehaving in terms of its compliance towards minimum wage and living wage and unfair and equitable wage practices. And these are some of the things that we really, I think, must read on top of course, just the statistics that are presented to us.
Thank you as always for your contribution. MD at ESG Analytics, Sifiso Skenjana, giving us his reaction to the latest unemployment numbers in South Africa.